welcome to Investor's Guide, that show that helps you find the safest and the best suited investment products in the market and will help you put together a portfolio that will help you get rich over the long term. We're going to figure out a strategy for you. So what you should do is grab a pen and paper and write down all of the advice you hear on the show today. Let's get straight to it. We're going to start off by helping a young investor strategize all of his goals over the next 20 years. It's quite a large task. In our portfolio review, we look at the SBI Magnum Equity Fund and we'll tell you if you should be investing in ULIPs at all. Let me bring in Narendra Kumar, the CEO of Value Research. Narendra, thank you so much for joining us. We have a lot of very wonderful questions for you on the show this week. Our first question is our portfolio question. It comes in from 30-year-old Rahul Pawar. He's written in from Pune. He's a software professional who takes home 50,000 rupees a month and his wife makes 60,000, he tells us. His parents are independent. They'll retire in 2 years. And he recently bought a home for which he will start EMIs in a couple of months. Now, he has a whole set of goals, Narendra. He wants to buy a car in the next 5 years. He's planning immigration in the next 5 years as well. He'd also like to save for his child's education over the next 25 years, put aside some money for medical emergencies, put aside some money for contingency, and put aside some money for leisure. He says he'd like to have about 1 crore rupees. He has policies from LIC right now that he's not really sure about. And it does seem like, I'm going to stop there before we keep reading through his question, but it does seem like he has a lot of goals. He's not really sure how to strategize for all of them. So if you were to look at his entire list of goals right now, and they're goals that all of us have, really. So it's a great example. How do we prioritize our goal? What should be right on top? Should it be the emergency fund? Should he then follow up with health insurance and life insurance and then go goal by goal? Because it might seem like he's doing a lot of things at once.
I think, these are essentials. You must have your emergency fund. If you can't afford a term plan, if you can't buy the life insurance, at least go for the accidental coverage of a adequate kind. And must have the health insurance, because if somebody is unwell, and the cost of treatment will derail you or any of your investment plans. So once you have these three things, so I don't think these three are goals. These are the essential foundations before which you can't get started with your investment. Then comes then I think you can prioritize your goal, and you can also segregate your goal into one is a short-term goal or something which you need in next 5 years. That requires a different kind of planning, something which is 5 years and more. And then you can further divide it, and if you have listed too many goals, then there are goals which are negotiable. There are goals without you can't do anything about it. For example, your child's education, I don't think you can negotiate the time and the need for it. But your holiday plan can be negotiated, or even the need to buy a home. I don't think this is a negotiable goal, but the time frame is definitely negotiable. So I think just have those very basic stuff in place. What is negotiable, what is not, what is short term, what is long term.
All right, so here's the thing. You have to have, of course, you have a target of a contingency fund. 3 to 6 months of expenses for your home can go into that contingency fund, especially if you have an EMI coming up, just in case you fall short in a certain month. Do not, you've said you want a medical emergency fund. You'd be better off just buying health insurance, like Narendra said. Buy health insurance for yourself and for your parents, especially for them, so you don't have to dip into any of your investments in case there's a problem. And of course, life insurance. You need to have life insurance that's 10 times your annual income. Narendra, it does seem like a lot of the ULIPs or a lot of the LIC policies that he has might not be the most efficient. Would you recommend that once he gets a term plan, he starts to exit all of these policies?
Yes, he should definitely, methodically plan to exit these policies. He can do without them, and in fact, that will leave him with some money, which he has listed quite a few goals, and that goals need to be, to be covered with an investment plan, and for that he needs money. I don't think he has adequate money, or he has too many goals coming in the short term as well. So it will be very useful. It will be very important to fulfill his objectives, that he free his money from ULIPs, buy a term plan, and methodically exit them.
All right, so you freed your money from the ULIPs. If he does say that he uses RDs for his short-term goals, Narendra, I'm also a little confused of why he would be buying a car in the next 5 years if he's also planning on leaving the country. Wouldn't make most sense to take that car with you. So if these are two goals that are clashing with each other, logically, pick one and only budget for any one of them. On his long-term view, Narendra, there's the child's education and his own future he's going to be looking after. If you look at the list of funds that he has right now, it doesn't again seem like a great portfolio. Would you like him to just use one of our portfolios instead?
Yes, but this is a very unusual portfolio. This is a portfolio which is not very much in line with the kind of framework we operate on. But incidentally, despite having a very unusual portfolio, unusual kind, it is a portfolio of great stock which we don't review. For example, the MNC fund is a great fund, but we don't rate it because it's not. All our funds are always diversified. So this is a fund which does not fall in the category of diversified funds. It is just little constrained on diversification. Likewise, ICICI Prudential Export and Service Sector Fund. That's also kind of fund and this fund has done exceptionally well. So looks like he is getting into greater detail and getting into the right fund. If he can actually continue with this, by all means he should continue this portfolio. But to keep it simple, something which is understandable, something which is trackable, and something which has been tested over a period of time. Of course, these two funds have, and the small cap fund, which has done exceptionally well. So his portfolio will be beating most of our, even our aggressive portfolio. But I don't know how long he has held these funds. If he has bought them in recent past, then I think he is in for bad times, because chasing past performance and buying funds based on that may not lead him to a great performance for his investment, because you have to buy funds before they do better, before they do well. So if he has bought them recently, then I think he should definitely look at our aggressive portfolio and growth portfolio. If he has held these three funds for the last 1 or 2 years, then I think he should continue looking for good funds himself and continue the good work.
Here is our growth portfolio on your screen. You can pick either this one, or if you're strong enough to hold on to the one that you have, then by all means continue investing in it. And if you'd like us to take a look at your portfolio, all you have to do is get in touch, write to us. Email ID is at the bottom of your screen. Krishna has written in, Narendra, 26 years old. He works as a central government employee and makes 25,000 rupees a month. He wants to save 5,000 rupees a month and invest it either in the PPF or the NPS or the Kisan Vikas Patra. Please advise what he should be doing. Now, he hasn't told us what this money is for, whether it's going to be long-term or short-term. I'd like to assume, because of his age, that it's going to be long-term money. Of the three options, would you say the NPS might be the most efficient, if those are the only three options we can consider for him?
I would say that, for somebody like him, the best option, given his age, will be an ELSS. Or an equity fund. If you are not bothered about your saving taxes because you don't have any income which needs a tax shelter, then choose any good equity fund and invest regularly. If you'll be upset with some volatility, then maybe get started with a balanced fund, and that will be the best option. If you are averse to investing in mutual fund for some reason, or if you are unable to invest in mutual fund for some logistical issues, then by all means go for NPS. I think making a long-term investment, PPF and National Savings Certificate, Kisan Vikas Patra, I don't think is a wise thing to do.
This week we're looking at the SBI Magnum Equity Fund. Avan is going to give you a quick introduction, and then we'll talk about whether or not you should invest in that fund. Avan.
Thanks for that, Faye. This week our fund in focus is the SBI Magnum Equity Fund. The fund was launched in 1991 and is one of India's oldest equity funds. Earlier known as Magnum Multiplier Plus 90, the scheme was made open-ended in January 1998. The fund has shown a significant improvement in performance in the last 5 years after streamlining the portfolio and fund strategy in the same period. Until 2006, it was an aggressively managed multi-cap fund with a fourth of its assets parked in mid-cap stocks. Mid-cap exposures were again scaled up during the bear markets of 2008 and 9, costing the fund dearly. Since 2009, large-cap stocks have made up to 90% or more of the portfolio, which has bolstered the fund's ability to contain the downside and lend consistency to its returns. Let's take a quick look at its track record. The fund has managed to clock in strong growth under R. Srinivasan's leadership, who has been the fund manager since May 2009. The fund's 1-year and 3-year returns at 43% and 22% are substantially ahead of the benchmark at 30% and 19% respectively. The fund is ranked number 2 in the 10-year period and given a 20% return in this period. Is this a good bet? Should you add this fund to your portfolio? Let's find out. With that, it's back to you, Faye.
All right, Aman, thank you for that information. Now, Narendra, SBI Magnum Equity, if we look at it over a 10-year horizon, it stands fairly strong in comparison to other funds in its category. But towards, say, 3 years or 5 years, or in the last 1 year, it has sort of been in the middle, around, just matching the category average. Would you say there are better options for us or for an investor looking for an opportunity at this point? Or does it continue to be right on top on your selection list?
I look at Magnum Equity with very different angle. One is that this fund is a very disciplined fund of late. Last 4 or 5 years, it has reorganized itself. It is a large cap fund. And this is a very old fund. This is a 25-year-old fund. This fund started sometime in August 1990 or so. A very old fund. It has undergone a lot of changes. It became open-ended about 10, 12 years, maybe 16 years back. But last 4 or 5 years, it has got redefined. It has redefined itself. The stated objective is that be a very disciplined, anchored to the index. And that is what is actually, right now investors are getting carried by the performance, because right now if you look at, the blockbuster performance of any fund, any small cap fund, mid cap fund, or a diversified, a general equity fund, which has a greater tilt toward, mid cap and small cap, or a higher allocation to mid and small cap, mid cap stocks, that looks, very, very appealing. But that may not be so, because you have to take into account the full market cycle, and this is where I think this fund will be very impressive. If you are looking at a fund for 5 years, investing regularly, you want reasonably stable return, and you want to participate 80% of the market upside. I think this is a kind of fund, and that is what it shows in its rating as well. If you look at its risk grade, which is below average, and return grade in its own category of large cap fund, I think it is above most others. It falls into the top 12.5%. So I think this is a fairly impressive, stable fund. Has done reasonably okay, and will protect you very well, very nicely on the downside relative to others. This will any fund, any equity fund is unlikely to escape a big market fall altogether. But this will be far more resilient, and this is what is impressive about this fund. It should not be looked upon only from the lens of performance or return.
All right, Narendra, on value research, this fund has 4 stars, and the last time we talked about it, you gave it 4 stars as well. Would you recommend maintenance of that same rating? Would you continue to give it 4 stars?
Yes, I consider it a 4-star fund, and I consider it as a very high quality large cap fund.
All right, 4 stars there for the SBI Magnum Equity Fund. Remember, Narendra said if you're a long-term investor, you're going to stay invested for the next 5 years, and you want something that will give you, a good upside of the market, but not take too many risks, not be very heavily tilted towards the mid-cap, then this is the fund that you're looking for. If there was anything in that review that you have a question about, feel free to write to us. Our email ID is at the bottom of your screen. Let's move on now to our very popular Hold or Sell segment. Well, Senthil Kumar has written in, Narendra, he'd like to create a corpus of 1 crore rupees over the next 4 years, and that's quite a tall ask given he's putting aside about 70,000 rupees in mutual funds. He currently has SIPs of worth about 20,000 rupees that are going in. He's going to take that up to 70,000 rupees a month, and he'd like to know if his portfolio is on track. Well, the first one on his list is the Franklin India High Growth Companies, Narendra. It's a strong performer. Would you recommend he continues that investment?
Yeah, this is a fund which I like, simply because it's not a stated small cap fund, it's not a stated micro cap fund or a mid cap fund. It can well have anything, and it can change its complexion depending on the state of the market, attractiveness of companies. So and this has been a stellar fund. So yes, this is a fund worth having.
Well, the next on his list is a Reliance Small Cap Fund. Again, another small cap fund. He also has Franklin India smaller companies right behind it. So his aim is obviously to tank up on the small caps and maximize his return over the next 4 years. But is that a strategy you would recommend? And B, are these 2 funds that you would recommend he continues investing in?
No, one is that I would like to warn him that if he is looking at a very important goal 4 years from now and banking on this strategy, he could be in for big disappointment. There is a modest chance that he will achieve his goal. but there is a reasonable chance that he will not achieve his goal of 1 crore in 4 years with and there is that possibility isn't narrow. So he should be very if it is for some goal which is negotiable, if it happens in 4 years, good. If it takes 6.5 years, that should also be fine. Then he should pursue it. Otherwise, he is in for great disappointment. He should definitely lower his expectation. And 4-year time frame is just not good enough for you to be considering equity.
Well, he also has a long list of mid-cap funds, Narendra. He has the UTI mid-cap, iPro Value Discovery, HDFC mid-cap opportunities, and the Mirae Asset India Opportunities Fund. Of all of these 4 funds, would you like him to continue all of them? It does seem like he's extremely tilted to that end of the market. Just on the basis of performance, are these all good performers? Should he continue these investments?
They are all good for performers. In fact, they are all outstanding performers, and some of them are impressive in their own ways. And all these funds are quite differentiated. In fact, if we look at these funds, when we choose a large and mid-cap fund or a large-cap fund, we know that if you choose 3 funds, 50% of the portfolio will have an overlap. They will have a common portfolio. You will have similar underlying stocks within the fund. Not in this case. You know, Reliance Small Cap is very different from Franklin India High Growth Companies Fund. Likewise, Mirae Asset India Opportunity Fund is very different from, HDFC Mid Cap Opportunity. So I would say that he has chosen unusually good fund, very different kind of mandate. Some of these funds also have a modest large cap allocation, and maybe they have been forced into those.
Well, Narendra, his goal aside, he'd also like to add ICICI Prudential Focus Blue Chip and UTI Equity in large caps to this portfolio. Is that something you would recommend he does? If he does that, while he would have a more rounded portfolio, he'd have a lot of funds that might be one too many. Would you recommend he adds those 2 funds to his portfolio?
That particular dimension, these 2 funds will definitely moderate his return as well as moderate the risk of his portfolio, because right now I think that possibly he hasn't seen a market downside. He hasn't seen a situation like 2000. Maybe a 2008 kind of situation may not repeat, but there's a possibility. What will happen if he is faced with a situation that the market goes down by 30% and his funds are down 40%? Will he be fine with it? Will he be able to stick to his strategy? And then market takes 2-3 years to recover, as it happened after 2008. After 2008, we saw a recovery in 2009, but since then, I don't think market has regained. It took 3-4 years for it to recover. So if he's faced with a situation like that, I think bull market creates a lot of brave investor, but I think it will be useful to look at the other side of great performance in a brief period of time and simulate it yourself. How will you reconcile with it? How will you settle with it? Will you be able to keep your head above water? And how upset will you be? Will your investment plan will get derailed? If you can reconcile with that, that's fine. If you can't, then I think you have a problem. You should be taking a more moderate approach to your investment with fairly diversified portfolios. Not necessarily the ones which have done, most of these funds are up in the region of 70 to 100% in the last 1 year. Perhaps that is guiding his choice.
All right, so remember that, especially like Narendra said, if you have a hard goal at the end of 4 years, that you're absolutely going to need that 1 crore rupees, that this might not be the best way to do that, or it might be too ambitious a target. It does make sense, though, if your goal is flexible, you can push it by a couple of years if you haven't really achieved that target. Narendra, thank you so much for joining us on the show today and answering all of our questions. It's a pleasure.
Thank you.
You're watching Investors Guide on ET Now. I've brought in Gajendra Kothari to answer questions on asset allocation. Gajendra, thank you for joining us. Our first question comes in from a woman investor, and you know how happy that makes me. Neha has written in. She's an NRI. She wants to know if it's a good idea right now to put her money in an NRE fixed deposit or in a mutual fund. Now, she tells us she's invested in many ULIPs with 6.5 lakh rupees as premium going in every year for the next 10 years. She wants to know where she should surrender all of those ULIPs and invest somewhere else. Well, Neha, before Gajendra tells you what to do, I have a fundamental problem with the question that you're asking, is that you don't have any goals that you're focusing on. So if it's a short-term goal in the next 2 or 3 years, you should be using a fixed deposit, especially the NRE. If it's a long-term goal, then you consider equity, and then we can decide how you're going to invest in equity. But Gajendra, first of all, let's tackle the ULIP question. She seems to have a lot of ULIPs. She's not really sure what the money is for. They're also an inefficient way to invest at this point. Would you recommend she considers moving out of them?
In ULIPs, the charges are very high, and it's quite unfortunate that you have been made to invest in ULIPs for long term. If the charges you are paying still is upwards of 2 to 3%, then I would recommend you to switch this, or surrender the money into ULIPs. Don't buy any further ULIPs. Also, before sending, you need to just check what are your surrender charges, and then you can withdraw the money from these ULIPs and rather put in equity mutual funds for a long term. And in the long term, this portfolio really outperform your ULIP portfolio.
All right, our next question is Mahesh. Mahesh would like to invest 1 lakh rupees a month in SIPs in mutual funds for high returns. He tells us he'd like to save for his son over the next 10 years. He wants to know, does it make sense to use an ELSS, or is there a better fund that he can opt for? What's the expected corpus after 10 years? So Gajendra, he's effectively asking you to predict how the market is going to do in the next 10 years. And trust me, if any of us knew, we'd be very, very rich. But the truth is that if you do invest for 10 years, you don't stand a chance of losing any money. Gajendra, would you give him some recommendations on how he should go about doing this?
Hi Mahesh. Since you mentioned that you want to invest for 10 years, which is a very good term, and you are willing to take a little high risk to get high returns, so you have a lot of options to choose from. So first thing, if you want to invest in diversified equity funds, which is more of a large cap, and more conservative, your money is invested into top 50 to 100 companies of India, so you can consider investing in large cap diversified equity funds. Herein, if you expect a return of 12% per annum, which is quite a conservative estimate, then 1 lakh rupees a month over next 10 years will give you roughly around 2.32 crores of corpus, which is pretty high. And the funds which you can consider investing in this space, you can consider investing in any one of these funds. It can be either Birla Sun Life Frontline Equity Fund, or Mere Asset India Opportunities Fund, or Franklin India Blue Chip Fund. I would not recommend you to put money into mid cap or small cap funds, though it can generate high returns, because I believe most of investors should stick to large cap funds for consistent returns.
All right, that's a wrap on Investors Guide. Thank you so much for watching. Gajendra, thank you for answering our questions as well. Any question at all about your money, write to us. Email ID is at the bottom of your screen. You can also reach me personally on Twitter. Thanks for watching.